2012 has proven to be a tough year for the world economy, but despite its ups and downs, most Asian financial markets are ending the year on a strong note. How will 2013 look like, especially for China, which is still a major growth engine? Young-Hao Pu, Regional CIO, Asia Pacific, UBS Wealth Management, will share his views on what to expect and how to position in 2013. Focusing on China, what factors do you think will drive the country's economy next year?
Next year, I think China will see the further improvement in the export front. Plus, I think domestic investment, particularly infrastructural investment, will help the economy start to recover. On the top, we also see the domestic consumption will continue to support economic growth, helped by wage increase. So overall, we do see China hitting the bottom this year and gradually recover in next year.
Given that scenario, what do you think is the best way to approach the Chinese financial market heading into the new year?
Entering 2013, I think we should look at the new leadership. The new leadership obviously is going to embark a new sort of economic restructuring to address the economic imbalance, to improve the people's life, to encourage more R&D and industry upgrading, and have more broader-based economic growth and more quality, more efficiency. Under such a scenario, we should see a material change in terms of Chinese economic performance. I think in the first half of next year, we should see further improvement driving by the infrastructural investment and inventory restocking. Into the second half, I think domestic consumption investment, particularly including like real estate investment, urbanization, all these kind of concepts will drive the investment growth plus the consumption growth. So all this boils down to the relatively positive performance for the Chinese stock market to perform in 2013. Given, let's say, default rate are still low, economic momentum is going to have a further improvement. The investor into corporate bond still one of the major investment choices for investors. Considering in the zero interest rate environment, Chinese corporate bonds still offer a decent yield. For example, for the high yield bond, still offer relatively about 7% bond yield. For investment grade bond, still offer over 3%. In the zero interest rate environment, I think this kind of yield are still decent or attractive.
Can you also share your outlook and investment views on currencies?
In 2012, we see three major economies engaging quantitative easing. In the US, we see the Fed announced to extend asset purchasing program, and which means going to end up with like 85 billion per month net new money injecting into system. In Europe, ECB will continue its OMT program to injecting money into the Eurozone system, supporting peripheral European countries' government bond. In Japan, I believe the newly elected government will more pushing the BOJ to do the asset purchasing program, which end up injecting more yen into system and devalue the yen. So in total, we expect that the Western major currencies is going to devalue. So as a consequence, we like commodity currency, growth currency. We prefer more emerging market currency because emerging market have more growth and still maintain the decent amount of trade surplus in the most part of emerging market world.
And finally, what are your expectations and what opportunities do you see in commodities?
In 2013, we expect the commodities stay relatively stable, but we like energy commodity because we believe that the global economic recovery, particularly from emerging market, we're going to see more demand for energy commodity. And secondly, by a certain degree, we also like precious metal like gold. The reason is because the major economy are actively engaged in quantitative easing, devalue their currency. So holding certain amount of gold, let's say 5% in your portfolio, probably able to enable you to protect you from the inflation and also offsetting the devaluation of the major currencies.
Thank you, Young-Hao, for sharing your views with us. To summarize, the world economy should continue to recover in 2013, while China's growth momentum should continue to gather pace. If you're interested in pursuing the opportunities Young-Hao has identified, please contact your UBS client advisor who can advise you on the best way to integrate them in your portfolio.